Hello, today is Friday. It is 4:49 p.m. April 14, 2023. Today's session is titled The Stock Market Breath Overshadows Fed's Recession Talk, and this is your weekend report. Hi, this is Jonathan Gurney, Portfolio Manager of Gurney Financial. Friendly reminder that this post is for informational use only. The views expressed are those of the author Jonathan M. Gurney. This material is not intended to be relied upon as forecast, research, or investment advice, and is not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. In short, we're keeping clients aware of what is happening in the stock market, the moves we made, and why we made them. Okay, so let's go over what the benchmark did this week first. Hold on one second. Switch screens here. Okay, so this is the 1 week. Not a bad week. So just so you understand my mindset going into this week, it's really important to understand what was going on this week. So this week we had inflation data on Wednesday. We had Fed minutes on Wednesday as well. Two huge events that can swing you 3%. Volatility is actually going down, which is good. The VIX is low, volatility is decreasing, but those events can be so whiplashy that I don't take a lot of risk. So just so you're aware, like this week I was in and out quick to try to just get a green week. I don't want to take a ton of risk. I want to see how the market evolves around these big events. If I get a good entry, I'll take it. So everything is sized down because usually in these events, they're so random and they just don't make much sense. Okay. So overall, the market did pretty well. The S&P 500 was up 0.79%. We were up 0.51%. So again, you can kind of see what I was doing here. I was chipping away. And again, I'm in the market about 1/20th of what the market is actually doing. So I'm not in the market very long because of the risk involved in the market right now. So overall, you can see Monday, this is less risk than the S&P 500, and I beat both days. This was actually like zero, but on Tuesday, it unched, meaning it was flat completely. So we protect. The tricky part was Wednesday. Tuesday night, hold on, let me show you this. In short, what I wish I would have done better on was Thursday. Thursday was big CPI data, and it got me off guard. It regained so many levels, and it was a straight up move without any corrections or any tests. You just got to say, hey, I missed it. Relax. You're like, wait, you were down that day? It's because I added at the close, and that's why I was up on a day like today, on Friday. So overall, the theme is this. I wanted to get a green week, which we did. This does not mean we were negative on the week. This means I lost to the benchmark by 0.30%, which I'm fine to do when the volatility is 3 times and I'm in and out. So overall, the theme is this. The S&P 500 and the breath remains strong. Like, breath remains strong. That's Tuesday. Hold on. This is going to be probably just as strong. Okay. So the breath remains strong and we're uptrending. So breath, again, if you don't know what that means, is overall, if I threw a dart and try to pick an individual stock in the NASDAQ or the NYSE, New York Stock Exchange, random dart, picked one, what were the odds of that stock doing well? This means the breath is improving. So you have better odds of good risk reward is what that means. So now let's go to the price action. Overall, what do you notice since the beginning of April? Pretty sideways, pretty choppy. We had this huge move, the FOMC breakout. We had this big 3% move, and we've been basically consolidating since. Okay, so that's the summary. Over the last 2 weeks, we've been saying the following, and it's in the top right. Get above 41.17. I'm going to switch screens. Get above 40. We're currently at 41.37. Okay, 41.37. So we did manage to close 2 days above 41.17 and 41.35. So that is good. You can't fight that. Price action is saying, hey, remain bullish. Now take a look here and you'll see the trend here. This downtrend is key here. The downtrend line is key. Every time we've touched it, even today, like we touched 41.13 today. Yeah, 41.13 was the low. Touched it. We keep bouncing off that right on the dot. So just to show how difficult this market is, we were beating the S&P 500 until the last 20 minutes. Okay. And again, I'm taking half position. So I'm taking a lot less risk in the market. And look at this move straight up the last 20 minutes. Boom. And after the market closed, I'm going to show this to you as well. Yeah, it's actually went positive. So the market closed down, the S&P 500 closed down 22%, and it moved 0.25% after the close. So we actually added after the close, so it worked out. So 41.38 is when we got where we got in. If I'm being honest with you, I do think that it's going to be difficult. Okay. My thought process is this month, I'd be shocked if we don't get to 4,200. And I'm going to switch screens so you can see this. I would be shocked if we don't get to 4,200. Okay. 4,200 is up here. And I'd be shocked if we don't get there, but it's not going to be an easy route to get there. Look at what this did to get the 4,200 last time. And I think this V here, we're going to shred out, and I think we're going to get some scares along the way. So my guess, and again, I don't have a crystal ball, I'm going to trade the levels, but my guess is we gap up, which we're already up 0.25%, and my guess is we struggle to hold 41.50 again. Okay, so let me take a look here. It did squeeze into the close. Okay, so risk reward is going to be almost overbought going into the open on Monday. So I'll probably take profits going into the open. We'll see. 41.50 is a key level. I don't want to get overbought going into a key level, and 41.50 is a huge level. Okay, so you have to understand that. So it's a difficult situation because I do think this month we hit 4,200, but would it surprise me to potentially test 40.60? I think that's actually probable. So I'm not pessimistic at all. I think we will end the month stronger. I don't know which one comes first, 4,200 or 40.60. Okay, so I have 50% on because we're above the key levels, 41.17 and 41.35. Next week, the key levels are 41.50 and 41.66. We do not want to lose 40.17, and that will be this downtrend line right here. So overall, right to remain optimistic. And again, if you look at the title, I'm going to switch screens so you can see it. Stock market breadth overshadows Fed's recession talk. So in the Fed minutes, they were basically saying in the latter portion of this year, the third quarter, they're expecting a recession. Calm down, okay? The market is not the economy. The market has already been in a recession. And so when you hear things like recession, it makes many people flee, okay? And what happened this week? That message went out and the market had a good week. It's just the way it works. So you have a situation where most people are still in cash. You have a situation where many people are stuck in bonds because they freaked out and bought T-bills, which there's nothing wrong with. They did fine, but you're missing a nice rally here, which doesn't surprise me. And just overall, that is how the market generally works. It tries to get everybody off sides. Just when you hear in the news everything's going to go crazy bad, this is what happens. So again, breadth is strong. Hold on, let me switch screens so you can see it. Okay, so breadth is strong. A chart a couple of weeks ago that I've been watching closely is the financials. We're talking about the financial banks, the issues that they were having a couple of weeks ago. And did it hold the downtrend line? It sure did, and it bounced. In fact, earnings were very, very strong, and they had a strong day in a red tape today. So overall, that is encouraging to see. Again, what I've always told you is this. There's nothing like price to change sentiment. Price is everything. You can have your opinion about the economy. I've never seen an economist optimistic on the market. They are always pessimistic because there's always something to gripe about. So just remember that. If technicals, price action, and economics align, then you have problems. Like last year, problems. I wish I had done better. Tried to, I shorted and got smacked. Okay. Overall, at this time, things are strong. We're holding key levels, higher highs and higher lows. Okay, so every big dip is being bought at this point. So you can't be too negative about that because things are looking pretty good. One thing that I do want to pay attention to is what is growth doing. So SMH, semiconductors, well off the lows, it bounced right where it needed to. It's what I was paying attention to. So it's still a little bit weaker, but it's not a bad thing. We are rotating. The market is rotating perfectly when it needs to. The QQQ, which has been a complete beast, is starting to cup. We'll see what happens next week, but it did hold where it needed to. Apple is so important to watch. It's such a big weighting in the indexes that you have to pay attention to see what it's doing, and it's starting to cup as well. Earnings are coming up, I think, pretty soon on that, so we'll have to watch, and it'll be important to pay attention to. So in short, my thought process is sometime this month we're going to hit 4,200. Do I think we will test lower eventually? I do, and that's going to probably want to be a buy at like 40.60. If we test there, I hope we test those levels earlier. I hope we test the lower levels this mid section of the month, which often is where volatility comes. And then later in the month, we rally. So in general, what I want to happen is it to scare the majority of people out. I think people are chasing this, and that's why we're squeezing into close. They want to buy every dip, okay? So I think if we saw a dip and it kept going lower, it would get everybody negative again, and that's where you want to buy, okay? So overall, good week, positive week. I did exactly what I wanted to. It was unfortunate what happened at the close. Again, we were beating the S&P 500 until the last 20 minutes, but these events or, these end of day squeezes, it could go the complete opposite way and you could lose your butt. And I was not going to have a negative week this week. So it's just crazy the way it works. But overall, there were some signals to show that we could have squeezed. I just didn't want to take the risk, to be honest with you. So 1 second. I'm going to show you the VIX. There's the VIX. So this is the volatility index, and it is going down significantly. So it basically means there's smaller, we're not getting 3% swings anymore. We're getting more like 1.5% swings. So the VIX helps gauge, hey, if I take a buy order here, what's likely my max loss short term? That can obviously change, but the VIX is basically saying about 1.1% decline is about all you're going to get right now. So that's good because breadth is strong. So if you're buying when the VIX is low, ideally things are going to work out for you. So overall, there's a lot of good things to talk about, and people are still on the sidelines freaking out. So this is how the market works. This is generally when you get your big upswings. It's the first time, like I've been saying, in a long time where a lot of my signals are saying you actually might be able to start holding for a little bit, which would be great for me because I'm tired of trading in and out, in and out. It'll make you lose your mind. So overall, we're seeing some good things. I would like to see a little bit lower because we keep getting these straight up moves, and I'm not sure they're going to be sustainable short term. I think we will test lower and grind higher. So overall, I'm bullish, but it wouldn't surprise me to see lower some point next week. So have a good weekend. Just wanted to keep you posted. Have a good one, guys.